Welcome everyone to another edition #askrobco with James today. How are you doing, James?
Yeah, really good. Thanks, Rob. How about yourself?
Really good, thank you. Got over the snow from last week and obviously my birthday in the snow, as we discussed, got through that. Weather is getting better and hopefully onwards and upwards. Want to be really punchy today. We've got some really good headline stuff. We're going to go into the data, exiting lockdown 3, we're going to discuss. We've got the budget coming up, stamp duty, sales trends, prices, and all other things we've seen in the last week. So we're going to go and cover all of that. So we're seeing some really good stuff, some traction. You know, we're in week 6 now, and we're getting some real traction. For those that are very kindly following every week, whether live or afterwards on the other platforms, we've been telling you a story about the data and what we're seeing, both in terms of factual information in terms of the sales that are going through, and then also the volume and work that we're seeing on the ground, which we combine to then give our input or output every week. So if you open up handout number 1, like we always do, on the right hand side in your handout, that's our latest sales intel. Now the story is progressing, very much like we've been discussing the last few weeks. So new instructions this week, week 6, highlighted in the deep blue, 342 new instructions, the highest amount of this year, getting back to the bigger volumes of 2020, and that trend is just going up and up and up every week. I told you last week, I said the agents are telling us loads of stock is coming on stream, and we are seeing the stock coming on stream. The facts out there tell us more instructions. Lockdown, I suppose, is going to get announced next week. Next Monday, the government are announcing. We are expecting that from March the 8th, it's believed, or the week 8th to the 15th of March is when schools will return and certain other areas of the working economy will have relaxations on lockdown. So we're talking 2 to 3 weeks, more or less 3 weeks from where we are today. And that will allow for even more instructions because there's still a bit of pent-up demand from people that want to put properties on the market that still isn't coming through. So the 342 we've hit this week, week 6, best volume of new instructions this year. That's only going up, and all the agents are telling us that's moving in a positive direction. Moving on to the sold figures, again, we've breached the 200 figure for this year so far, so the best sales week in 2021. And again, it's following the trend that I've been telling you for weeks. There's going to be more and more and more, and that is all happening on the back of a pent-up sales process and the backlog of transactions waiting to go through, and the fact that we're still in lockdown. So when those two things are not there in terms of the lockdown, us coming out, the more instructions, it will feed through to more sales, and the trend is really, really clear. On the right-hand side, we have our prime, super prime data, 235, 10 million. I've given you a sneak preview of how the beginning of the month has gone, and you will see that the performance in the 5 million plus in the very early stages already of 2021 and February is really strong. So already there's nearly more 5 million plus deals in February than there was in the whole of January. The trend, even in a short month like February, the trend looks like the 2, 3, 5, 10 million pound bracket of transactions will outperform February, and that could be an indicator of where things are to come in the rest of the year. And the key to the rest of the year and the performance of the data that I'm sharing here and we're looking at every week is going to be lockdown being released in the next 3 or 4 weeks, 8th to the 15th of March, then the budget 3rd of March, then what happens with the incentives in the industry, stamp duty, etc., etc., and that we're all going to know hopefully in the next week or two, which will really set the pathway for 2021. Early indicators are, all this data is telling us it's moving in a positive direction. James.
Thank you, Rob. Thank you. So just to recap on that, so we've got instructions are up week on week, very positive, and I think it's reflective of some of the news which we've been bringing you in the last few weeks. They're still at around sort of level of sort of 2/3 in terms of stock from the peak levels which we were seeing in Q3, Q4 2020. Price reductions, there's been less price reductions this week. Under offer numbers are stable. But like Rob has said, the amount of sold properties this week is over 200, which is very positive. And it was that period in November, December last year where we were seeing 200 more or less every week or in excess of. And that was really the height of the market. It was very hot in the market. We were very active. We're out every day doing purchases, transactions. And just to finally a point on prime central London, good activity so far in 2021. It's going to be an interesting watch this space after last year's bumper year, record year of the amount in terms of not just volume but also price on prime central London, those 10 million plus, 5 million plus sales. So the early stages, early indicators seem that we're building on last year rather than that market falling away.
Yeah, and there are so many indicators involved in all of that. We've got the house price average increase across the board, depending on which source you're going to, which was broadly 7 or 8%. Then you've got to build into that 7 or 8% the stamp duty saving. So that's kind of like a bit of a false figure. And until that stamp duty window isn't there anymore. Then we've got the percentage change in house prices across different areas, and actually the area that saw the least growth was London. So that would really show that the surge was everywhere else in the lower brackets. Having said all of that, it's very clear that the transactional volume in 2, 3, 5, 10 million is really positive. So you've got a bit of interesting data there. You've got prime and super prime performing well, the rest of the country performing well, but the price growth isn't being seen in London. London saw the smallest amount of price growth in the whole country in 2020 with the latest stats and figures that were being seen, and that really shows the nuances that are currently in the market that take into account various factors, which is the pent-up demand, the timelines, the tax situation, stamp duty, etc. So it's a real nuanced market. It's not just a homogenous, everything's one way and the whole market is going up. You've got real nuances within the markets there, but the data that we're receiving, and again, this is the real key message, from lenders, credit, sanction, from conveyancing, from legals, from estate agencies to valuers. This is the supply chain of the entire industry. When their workloads are high and there's lots of volume, it's the key indicator of how the market is performing. And where we are at the moment, second week in February, agents are telling me loads of valuations are coming in, loads of stock is about to come on the market. That's on the uptick. Conveyancers are flooded. We had a conveyancer on the other week telling us double volume the back end of last year, and now slowing down the transaction speed, anything up to 8, 10, 12 weeks. Then there's us, the surveyors, doing the transactions for the banks and the credit teams. We're seeing an upturn in instructions because there's more coming to the market. That's all moving north week by week by week by week, and that is how 2021 has played so far. And we still don't know the answers to the questions of when is lockdown 3 coming to an end, please God, the last one. What are we going to get told in the budget on March the 3rd? What incentives are there going to be to the property market as the key indicator of where we're going to move forward from once we get out of lockdown and once we hear from the budget? So the next few weeks are critical in terms of what the rest of the year is going to look like and how we are going to recover from the pandemic and the lockdowns. James.
Thank you, Rob. And just following on from some of the market news and positivity that we've got, we know that the UK House Price Index Land Registry recorded record highs in December 2020, and we know that their figures are a little bit historic and a little bit delayed, but we wanted just to bring you those official figures. And basically, the UK house price figure now, the average price of a house in the UK is just over £250,000, which not only is the highest ever figure, it's also the highest annual growth rate the UK's seen since October 2014, that annualized jump during that period. So we're at 8.5% growth year on year to December 2020. We note that this has been greatly influenced by the by buyers being able to take advantage of the stamp duty holiday. So those figures are slightly skewed, and some of the savings there could have been added on to some of the pricing and helped to fuel the market slightly. So there are some sort of artificial indicators or artificially inflated prices possibly. So we're going to have to wait to 2021 to see if that pricing just levels off, we continue to grow, or there's a slight slump, just an adjustment or correction, as some may say. Since then, businesses has remained closed largely at the start of this year, so hopefully a lot of businesses will be able to reopen after lockdown 3, albeit in the tiers system of tier 4, tier 3 possibly. So that'll be an interesting factor to monitor, both in the high street and those which are able to sort of come off the furlough schemes and return to work, hopefully.
Yeah, I've had so many calls with lenders and banks and credit teams over the last few weeks, and really everyone just wants to know where the market is going, what's going to happen with the budget and post lockdown, and we're really getting to the crunch moment now. Having said all of that, there's loads of activity in the market. Some of the key areas we've really focused on this year. I just saw a new 500 million London fund for build to rent homes, looking to build another 5,000 properties across London. That was a deal by Avanton. And so loads of build to rent transactions. You know, we only had the specialist on a few weeks ago, but that market is seeing a lot of interest, a lot of institutional money, a lot of funds, and that's going to go from strength to strength. The same with the HMO market. I've been on a lot of discussions with investors looking to go into that market, and the product in that market is very competitive at the moment. It's very attractive, and there are a lot of lenders now that kind of put that HMO piece as a virtually mainstream lending product now, sitting alongside the buy-to-let product, and that is a fascinating area from an investment perspective and something that's performing well. What else have you seen transactional wise or industry wise this week, James?
Yeah, just to sort of reaffirm that, I mean, in terms of mortgage pricing, this remains competitive at the moment, and we expect it to remain relatively low in terms of historic figures for the time being, and that's both on residential and buy-to-let deals. This comes on the back of some easing of the criteria from some lenders and the return of those higher loan-to-value mortgages, which we've talked about recently, those sort of 80 or 90% loan-to-value mortgages which are available for borrowers, and especially sort of geared towards those first-time buyers, and transactions generally capped at 600,000 for the highest loan-to-value mortgages.
Yeah.
Just following on from that, oh no, go on, sorry, Rob.
No, you go.
I was just going to bring us some other news in the property market. We know that Countrywide shareholders have approved the £223.1 million takeover deal by Connells, something that has been bubbling for some months. We note that sort of earlier at the start of this week, shareholders of the estate agency Countrywide approved the takeover offer from rival firm Connells. We know that Countrywide, they own a number of high street estate agency brands such as Bairstow Eves and also Hamptons. Like we said, we brought you a bit of news on this at the end of last year with the initial offer of 250 pence per share. This is raised significantly, with the final price being 395 pence per share. equating to the £223.1 million takeover deal. Connell's outbids private equity firm Alchemy on this deal. So an interesting one. That'll see Countrywide, obviously one of the market leaders. They have a lot of surveyors that work for them. They also have, like we said, the high street presence, Bairstow, Hampton. So that'll be interesting to see if there's any rebranding on the high street there, or how that might change some of the operations from Connell's.
Yeah, I mean, that's a huge transaction, and you're right, it's been bubbling for ages, and it's going to have a major impact on the estate agency world, valuation world. Two huge enterprises coming together. It'll be fascinating to see how that gets amalgamated, how they work together, how that gets integrated. It'd be really good to see how that plays out this year. Picking up on something that we heard from the Bank of England's chief economist last week, he was reporting the view that the UK was ready to release loads of pent-up financial energy, and that the economy would function like a coiled spring, and that would be firing on all cylinders once we get out of lockdown. So what is behind that is that financial household finances are so strong, and so much money has been saved during the lockdown where it hasn't been spent on other things, and debt is so cheap currently, it's going to fuel further ambitions for house purchases in the residential market, and spending in all aspects of retail and the economy once people are allowed to go out and do so. And I think, although it sounds very basic, you know, the basics of economics, the fact that there is so much money sitting in people's bank accounts following the pandemic and lockdown, and that's just going to get released to create this positive rebound on the back of hopefully the incredible vaccination program. There is a chance that the UK could see some real positive sentiment post Brexit, post pandemic. If things go well and in a positive right direction, we could be looking at Q3, Q4 of a real positive economic surge. What are your thoughts on that, James?
Yeah, thanks, Rob. I think that obviously there's been a mass disparity across different households of how the last 12 months has impacted them. But for those which have been able to continue working, in terms of the portion of their income, which is disposable income, that really hasn't been being spent in the same manner of which you would ordinarily spend in terms of trends, in terms of being able to go out and buy consumer goods. So there is some pent-up demand there. I think it's going to be interesting in a couple of weeks' time when we see the budget, because obviously that is going to play on people's minds, and what their spending trends are, what they're looking to spend money on, if there's going to be any changes on VAT, tax allowances, changes. Is there going to be some incentivizations for certain industries which have obviously been shut for some time? Because I know the property market has obviously had the benefit of the stamp duty holiday, and there was the Eat Out to Help Out scheme earlier last summer. Is the government going to move to try and help some of the other sectors and industries in that budget? And is that going to really be able to target people's spending? That's going to be an interesting one, which we'll be able to react on the 3rd of March.
Yeah, I think it's going to be fascinating the coming weeks. I think the challenge of the job market situation, finding that, I don't know if the latest figure is 1 million lost jobs, getting those people back into work as quickly as possible. You've then got the issue with affordability in terms of current mortgage payments and rents have had the window put in so that possessions can't take place, and you can get a holiday on your payment. When that expires, what is the landscape really going to look like? All these things are going to come to a crunch, and it's just how well the economy, the sentiment, the government, the incentives that they put in place are able to manage the downsides and the fears of a certain amount of the population, and then the upside of what all the other areas of positivity can bring once we are free to move on following all the challenges and the volatility and the uncertainty. I mean, these are the questions that credit and risk and sanction and lenders and banks and funds and institutions are throwing at us every week. They want to know the answers, and we're doing our best to follow the data and the intel to guide you through the coming months and what we will be sharing. And hopefully that's the value that we continuously add on this platform, is to tell you what we see, and that's live. It's not retracted, it's not delayed, it's absolutely what we're seeing on a daily basis. What else are we seeing out there, James? Any other areas you want to discuss?
Yeah, sure, Rob. So we've obviously got it's been in the news this week, Help to Buy is extended for all buyers until the 31st of May. This was announced by Home England that it will extend the deadline for the completion for the build and purchase, giving both buyers and builders the time to take advantage of the outgoing scheme. Now, this isn't the end of Help to Buy. It will continue, but under the previous umbrella, that is now applications for that are now closed, and the scheme will cease on the 31st of May. There is a new Help to Buy scheme, and applications can be made under it's noted as the Help to Buy equity loan 2021 to 2023. It will run, and it's only available to first-time buyers. That scheme is now open, and it officially starts in terms of the sort of release of funds from the 1st of April, and is planned to end on the 31st of March 2023. So they've just tightened up the parameters and the criteria for that Help to Buy scheme to really get those first-time buyers on the property ladder, because previously you didn't have to be a first-time buyer to benefit from the scheme. So it's really they've targeted those first-time buyers, as Boris Johnson was saying end of last year. He wants a generation rent to transform into generation buy. So possibly that scheme will see an enhancement on the amount of first-time buyers in the market.
Yeah, I'm following that path. My intuition tells me that the government, whether it's in the budget or further down the line, the government are going to put all their eggs in the property market basket, and they will incentivize this market and this industry for growth, to help the economy get out of the position that we are currently in because of the pandemic. I've been saying it for a long time. It's what I believe. I feel it's what they see as the way out, whether it's Help to Buy, whether it's the stamp duty window, whether it's some other support system for the property industry within itself. I think it's going to be incentivized, and they're going to want to keep this property train moving in a positive direction for the foreseeable future, but definitely for the short-term future. And that's where I see things going, and it's going to be fascinating over the next few weeks. Hopefully we touched on all the key points from the last week, unless there's anything else you've got to add, James.
No, just that it's going to be quite well, it's going to be an extremely eagerly anticipated budget on the 3rd of March, which we're going to be covering here. It's going to be interesting, like we said earlier, about those people with some pent-up demand across the economy. I mean, there's been change of lifestyles for people. People are moving out of cities into more rural locations. Doesn't mean they're changing their car. They need a larger car. They need more working from home equipment. They need different sort of layouts of their homes. And how is the government going to adapt? Are they going to try and fuel certain avenues to make these more favourable for buyers, or are they going to penalise those that are able to afford those larger sort of capital expenditures? It's going to be an interesting one to watch this space on.
Definitely this year, and the areas, HMOs, the office market space is going to be fascinating when people come back to work. The serviced office space is fascinating. Last mile logistics and general logistics and warehouse, that's a fascinating market. What happens to the residential space moving forward? These are all the key areas that we're going to be tracking in 2021 and beyond. Hopefully, we are answering all of your questions and giving you all of the intel and data. Anyone that's not getting what they want or how they want it, please reach out and we will do our best to accommodate. Thank you all for joining. Everyone take care of yourselves. Thank you for following us on all the platforms, on LinkedIn, on Instagram, on Twitter, on YouTube, on the live webinars. Thank you all for joining. Thank you for your support. Super grateful. Thanks for everything, James. Thanks for the whole team around this show. And we will see you same time, same place, 1 p.m. every Wednesday, #AskRobco. Take care, everyone. Thanks for joining.
Thanks very much.